It's the top of the hour, so welcome everybody to the trade planning session. I hope, I know last couple of days, couple of weeks we had some internet power issues, but unfortunately this is the situation that we have over here. I am at the epicenter of the hurricane, and up till today there is a lot of people, over 500,000 people in this area that does not have power, so they are trying to fix the power for everybody, and because of most of the houses have been submerged underwater, they have to cut off power from some people so that they can test and make sure that the person that they're connecting doesn't catch on fire or blow up or stuff like that. So hopefully this situation will end up soon, but it's a little bit unfortunate, but that's the situation we're in. So kindly bear with us, and we will be trying to make sure that everything is up to speed and you get the emails in time and all that kind of stuff. But anyway, so let's get started now. And as always, we start with the US dollars. All of you know that last week, of course, was the big US election, and there is a lot of talk going on about the fiscal cliff, about all that, the doom and gloom and all that lovely stuff. But the way we approach the market, we let the market tells us how they perceive the reality of whatever is being said, so that we can when we choose our trades, we choose our trades based upon what the market is saying, rather than what, let's say, the pundits are saying. If you take a look at this chart, this is the chart for the US dollar. This here was the November 6th. And before that, the dollar has been moving all the way as of October 17th. It bottomed, and it's moving from October 17th all the way up till making a series of highs until November 6th. We had like a snap down on the 7th, and then the market turned around, and the dollar now is pushing higher. Whatever the definition, or whatever, I have read several interpretations that the dollar is going up because it's a reserve currency, different to the euro. That whatever the reason is, it doesn't make any difference. The reason is it is going up. If it's going up because it's a reserve currency, fine and well, it is going up because it's a reserve currency. If it's going up because somebody likes to buy it, well, that's it. It's going up, and that's what we have to do. We have to be looking positively at the dollar. And as you can see here, we closed the week at 81.09. We have a couple of several structure points which I have defined for you the other day, but let me show them to you here on a separate chart. It is the 81.02, which is basically these highs right here, which is the breakout that led to this move, which is the 81.02, and it is also the breakout here. So the 81.02 is pretty much relevant and significant because it was the beginning. The break above the 81.02 led to a very explosive move way back in 2008, and that was right after the economic collapse, the stock market collapse, and that was the beginning of the move, which is the 81.02. Now, today they're singing the doom and the gloom and blah blah blah, the same pundits, the same guys again, and this is what the dollar is doing. It's back again above the 81.02. So assuming that these guys were right about the doom and the gloom, this was the effect that we had in the US dollar, and this is what's doing. So I hope they're right again, and we should act accordingly and buy the dollar again as long as we're above the 81.02. If we look at the other chart, which is the one that we have been using, which have all our lines, there are a couple of overlaying significant points, which is the first one, which is the 81.02, which is the big one, and then we have the 81.20, and of course the breakout point would be the 81.36. But guys, the key is the 81.02, because that was the one that we are able to identify from 2008. So that is the one we need to be looking at. The 81.20 and the 81.36 are all secondary in strength or relevance as to the 81.02. Therefore, we are looking to be, and as you can see the close here, even the close of this Friday is a brilliant close. The way that candlestick or the buying that came in during the day, it set up itself brilliantly. You started with a decline, it came back and triggered a buy signal, and then it ran and give you another buy signal, and pretty much it is closing near the high of the day, high and the high of the week. So based upon that, we're looking to be buyers of the US dollar. Okay, so we are going to change that. And the dollar will be the one we're looking at buying. The next one we're going to look at is the other strong currency from last week, which is the Japanese yen. And if we look at the weekly chart for the Japanese yen, we had what we called a structure failure when the prices traded below the 126.32, and this was like 3 weeks ago, and it continued very nicely to the downside, putting in a low of 124 or 123.99, and then we turned back, and again it is the duration of the election, and we turned around, we came back above another structural point, or a significant point, let's call it a significant point, which is the 125.63. We pushed higher, testing the 126.32, and then we sold off, and we closed the week at 125.93. This, I mean, the overriding trend that we have in the Japanese yen so far, the intraday or the interim trend, is basically a short, because coming below that structural point, that is the beginning of a, let's call it a bear market in the yen, and we're looking for a decline. It came back and it tested it one time and it failed, and this is the second time it tested it and it failed. So we're looking now to be sellers of the Japanese yen. This here is a sell signal with regards to the Japanese yen. So as far as the yen goes, it is a sell signal for us, and of course if it comes below, the let's get the number again, where the 125.63, which is about 30 pips from here, that would lead to at least a move down all the way to the 124. So we'll be looking to take a sell on the yen. We're looking to buy the US dollar. The next one we're going to look at is the Aussie dollar. This is a clean chart. I always like to have a clean chart that doesn't have any lines and stuff like that, so at least I can have an unbiased view. Of course, we are pretty much near all-time high in the Aussie dollar, but the Aussie dollar has been coiling as of late, and on the weekly it is still strong. I mean, on the weekly it is still strong, and if you look at it on the daily chart, it is let's say since July of 2011 it's been moving sideways. This still is strong. I mean, this is technically strong, but it is creating let's say sell signals which are short-lived. I mean, you will see them when we're looking at the Aussie yen, we're looking at the Aussie Swiss, we're looking at the Euro Aussie. You will see that you're getting buys and sell signals. So the trades that we're going to be taking in the Aussie will be our bias on this one. If I'm looking to this, it's right in the middle of this congestion. And if I'm looking at, again, you're looking at what you see. This is, it's now at 103.62. The all-time high is 105.66. So you're only two figures off the high. I mean, it's you cannot. And if you look at the chart, I mean, this is pretty much in a bull market since 2009. But it's now in a topping up formation. It's been topping up now since it put the high over here. The Australian economy is slowing down. They have decided they're not to cut during the last bank meeting, but they're not looking at raising any interest rate, and the global economies are weakening. So unless some person is taking the Aussie as a reserve currency, we might begin either to see some profit taking in the Aussie to the downside. So we're going to be, let's say, neutral to the Aussie. So we're going to be neutral to the Aussie on the plus or on the negative side. Now we're going to come to the three currencies that are working close to each other. One, which is the euro, of course, and which goes along very with the Swiss. And we're going to be looking also at the British pound. And if you look at the euro, this move here, that's a failure to make a high. I mean, we had this very nice move to the upside. We had a small structural failure over here. We had a structural push to the upside. We put the momentum high. We came down. We created a double structure point at the 125.80, 128.53. Now we put in a fail to make a higher high, which is the 131.47. And this becomes now our structural point, which is the 128.33. So we're building as you can see here. That is a pretty serious structural point. Number one, it has been tested twice, so this gives it the double validity or the double strength. Breaking it here, we broke it with momentum. We came back and tested back above it, and then we failed. So with this, I am looking for a further decline in the euro. I'm looking for it to actually test the 126.55, and if it does break this one, I'm looking for further liquidation. So until it gets to the 126.55, I'm looking to be a seller of the euro, and you can see it here on the weekly chart. So I would, if we break below the 126.55, the next area we should be getting to would be in the whereabouts of the 124.40, and that is based upon the index. So the euro would be a sell for us. Okay, so having done that, I might as well take the Swiss, and the Swiss is usually identical to the euro, but I want you to take an image of this chart. Take a picture image of this here, and take an image of this one here, and try to see if you can see the difference. That is the euro, and that is the Swiss. What is the difference? What is the difference between the chart of the euro and the chart of the Swiss? This is the Swiss, and this is the euro. The short answer is that here in the euro you have a failure to make a higher high, and then you have a structure break below the structure, so you have a trend change. In the Swiss, it actually put in a higher high, so you don't have a trend change in the Swiss. You have a pullback or a major retracement in the Swiss. So this now is something that is not confirming the other. We know that the Swiss and the euro move pretty much in tandem, and we can see that even though the Swiss broke and put in a higher high, the euro was able to pull it down. The euro created for us a structural failure and a trend change, but the Swiss has not. So the overriding here is still to the short side, but I will not, if I have to choose between shorting the Swiss and shorting the euro, I will short the euro rather than shorting the Swiss. Both of them are on a sell, but the Swiss is on a retracement, so we will be looking at prior lows or previous lows for any attempt to get a short covering or to get a buy. So the Swiss will be leading the euro to the upside, and the euro will be leading the Swiss to the downside. So if I'm looking for selling, I'm taking the sell out of the euros, and it's going to drag the Swiss with it to the downside. If the Swiss gives and starts giving us buy signal, it is going to halt or slow down the decline in the euro and pull it back up again. But both of them pretty much are moving in the same direction. So we are going to put the euro, the Swiss, we're going to keep the Swiss as a neutral buy or a sell, so still with a negative bias to it. That's the same with the Aussie. Now we're going to go to the British pound. This is truly in a bad shape. The pound is really in a bad shape. As we know, it's been moving in this session, and if you look, we agreed it's making lower highs and lower lows. It's doing this contracting, basically trading within this triangle, if you will, from the bottom of 2009. And this is, I mean, if you're looking at this chart, one of the ways that you can identify one of your magnificent trades, if you look at the bottom of 2009 right there, and if I put the chart, look how this been moving this way, sideways, and if I put a chart of the Aussie from 2009, that is the chart of the Aussie from 2009, you would see that taking the pair in that's again part of doing your, one of the reasons of doing the planning sessions, that when you look at, see something like this, they both of them turned to the upside in 2009, but look at this move in the Aussie and look at this move in the pound, doing nothing. So if you went long the Aussie and short the pound, that from 2009, that would have been a magnificent trade. Look at this, how magnificent that trade would be at that time. And at the same time, I'm just it just came, I wanted you to see that. So anyway, right now what we're having is the pound still trading in this narrow contracting, going nowhere kind of a pattern, and it's now beginning to break down to the downside, and you can see a lower high, and the lower high, it broke below the structure, it put another lower high, and now below the structure we closed the week at 159. That here we can construe that as a minor, let's say the 159, whatever. That is a big sell signal for the pound, and we should be looking at selling the pound. So the pound is on a sell for us. Okay, so the pound is a sell. Let's look at the Canadian right as well. The CAD also, that is beginning now to change trend and give us sell signals to the downside. We had the structural failure at 100.99 right there. We broke below it. We had a nice capitulation to the downside. This move is an excellent move because this confirms the structure point, and that is your failure to the downside. We do have, I don't know, I mean, it's not really this low, is 99.70. I mean, it couldn't even take up the low of the previous day. So I'm looking for the Canadian to be on the sell side, or I'm looking to be selling the CAD. Okay, I'm going to put the dollar and the New Zealand is basically also on a sell. So I'm going to look at the New Zealand later, but so the way we're going to plan our trades this week, we're looking to be buyers of the US dollar. We are looking at selling the yen. We're looking at selling the pound. We're looking at selling the euro. The Aussie is kind of neutral, so it's either a buy or a sell. So we're going to see the buy signals on that. So we're looking to be buyers of the dollar, and we're looking at selling the yen, the pound, the euro, and the CAD. The Swiss, as I said, is going to be leading the euro either to the upside or following it to the downside. And we're going to look at the Aussie yen, pound Aussie. We're going to look at shorting the euro Aussie, and we're also going to look at doing the euro CAD or the Aussie CAD. And of course the New Zealand is on a sell, so we're going to see what's happening with the Aussie New Zealand, the Aussie pound, the euro New Zealand. We're going to look at them, but primarily our bias is going to be buyers of the dollar, shorting the yen, the pound, the euro, and the CAD. We'll also be looking at the Aussie as a secondary, as a positive to a neutral, and we're looking at shorting the yen, the Aussie, going long the Aussie yen, short the pound Aussie, short the euro Aussie, and short the Aussie CAD. All right, that is the general plan. So let me save the recording.